Admitted versus non-admitted insurance. Most people purchase insurance coverage for their health, house, or other assets through admitted insurance companies. But there are also non-admitted insurance options for certain special cases. Insuring yourself with an admitted insurance company versus a non-admitted insurance provider can have its pros and cons. Typically, your broker or insurance representative will check if you have options with an admitted insurance company before insuring you through a non-admitted insurer. Here are the basics you need to know about non-admitted insurance, as well as some benefits. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you're doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about admitted versus non-admitted insurance. What is non-admitted insurance? Pretty simple. Non-admitted insurance refers to an insurance company that is not licensed with the states to provide insurance. As you know, in the United States, insurance is regulated at the state level, so you need to have a license. However, just because the non-admitted insurance carrier is not licensed as an insurance provider in the state or country, it does not mean it is not allowed to operate in the state. A non-admitted insurance carrier may provide coverage through a state licensed agency, broker, or representative. A non-admitted insurer does not have to follow the same criteria in underwriting, rate setting, and coverage as admitted insurance carriers. Non-admitted insurance is also sometimes referred to as excess and surplus insurance, or ENS, or surplus lines. So when you hear those words, they are interchangeable, they're synonymous. So exchange and surplus insurance, or ENS, or surplus lines, those three phrases, those three terms mean the same thing as non-admitted insurance. Now, where do you find non-admitted insurance? That's the question we've been hearing when we were preparing for the show. Non-admitted insurance can apply to many types of insurance products. Some examples are home insurance, where an area is considered a high-risk zone. For example, where the risk of tornado, hurricanes, and wildfires are high. We have California, we have Oregon, we have Nevada. You also have other examples include specialty line insurance, like professional liability insurance or high-value home insurance. If you have a multi-million-dollar home, then you're going to non-admitted insurance. High insurance risk, like in the case of earthquake insurance. Insurance for people who do not meet standard underwriting criteria. For example, those with insurability issues, too many claims, or if a standard insurance company cancels the policy and will not renew. We also have insurance for non-U.S. citizens or certain supplemental health insurance policies like long-term care. Non-admitted insurance is a key component in the insurance industry because it answers the need for specialty insurance coverage and or higher risk insurance needs. Remember though, that without non-admitted insurance, many people would be unable to get insurance coverage and may not be able to finance homes or be insured after a string of bad luck. Another thing I want to talk to you about after defining non-admitted insurance and told you what kind of economic areas where you can find non-admitted insurance, let's talk about the advantages of non-admitted insurance. Since rates are not regulated by the states, insurers do not have to submit their rates. Further, so you have lower premiums is one big benefit when it comes to non-admitted insurance. Further, the policy forms and product offering are not regulated by the states. Those insurers can offer coverage options that help states extend coverage in high-risk markets. Let me give you an example. Non-admitted insurance can help with people who need to use the FAIR Plan insurance. This is a state-mandated insurance making coverage available to those living in high-risk areas. Some of this coverage may be with non-admitted insurers or excess and surplus carriers. It's very important to understand why, because for authorities and for individuals, risk management, a big part of risk management is done through insurance. So if you have admitted insurance, these are your traditional insurance companies, Geico, State Farm, and so on and so forth. If they don't want to insure certain things because it's too expensive for them, or those events do not fall into play when it comes to their own operational model, you got to have somebody has to pick up the slack, right? And this is where non-admitted insurance carriers come into play. So for state authorities and for individuals, this is fantastic because you have an organization who is willing to cover that risk. So because surplus line insurance products are not subject to rating regulations at the state level, they can have an advantage over admitted insurers because they have the freedom to be more creative and responsive about the types of coverage they offer. That's what I was talking to you earlier, the diversity of coverage that non-admitted insurers can offer. So depending upon the situation and type of insurance of the non-admitted insurance products, the rates may be more expensive than a standard insurer's rate, but may provide insurance coverage that a standard insurer will not be willing to provide. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're also having a conversation right now between admitted versus non-admitted insurance. If you love the content's clarity and quality so far, please consider subscribing to our channel and turn on the notification bell so you can be informed in real time whenever we release a new show. And we release this kind of shows every single day, rain or shine. Let me talk about the difference between admitted versus non-admitted insurance. So the state provides protection to consumers who are insured with admitted insurance if the insurance company is unable to pay its claims or losses in the case of bankruptcy, for example. So the biggest difference here between the admitted insurer and the non-admitted insurer is that the non-admitted insurer does not have the financial backing from the state. Now, if you are a large, let's say a large non-state insurance company, you really don't care, right? If you're a multi-billion-dollar insurance company, you're based somewhere in London, or you're based in somewhere in Asia, or somewhere in Africa, or somewhere in Europe, you really don't care about the states backing you financially because you have those financial wherewithals yourself already. Now, are these insurers higher risk? Simply because they're not backed by the states, does that mean that they're higher risk? It depends, because non-admitted insurers can set their rates and are not subject to the local regulations on rate issues. This may allow the insurer to collect the appropriate premiums by charging the rate appropriate to the risk, which in turn may help them to be more profitable in general. This may give these non-admitted insurers strong financial stability. One thing for sure is that even though in actuality, even though in real life those non-insured, non-admitted insurers seem to have stronger financial stability, you still and always want to check the financial stability of an insurance company, whether admitted or not, before you do business with them. For example, in some cases, if the AM Best rating of a non-admitted insurance company is stronger than an admitted one, it can indicate that the non-admitted insurer is more financially stable to handle claims and losses. So what I'm trying to say here is that there is a good resource, online resource, A&M Best Rating, and you can check them out if you want to before you sign up for an insurance company. You want to check their rating on the A&M Best Rating website. How to check if a company is financially stable? If you ever wonder whether your insurance provider is stable, you can check their financial stability ratings with various organizations that provide financial ratings on insurers. I would start with, I think I mentioned A&M, that's true, but you also want to go to the state authorities. If you have a non-admitted insurance company, you can check their annual report, financial reports yourself, go to their website and read about them. If you're not financially inclined, or you don't have financially inclined, if you're not, if you don't have a knack for things financial, you can just enlist the help of somebody else. You can reach out to a broker. You can reach out to, if you have somebody in the family who has a knack for financial stuff, they can help you read and understand what you're getting yourself into. You can also call the state authorities or you can even Google the company. Again, this is if you have a non-admitted insurer. Let me give you another type of or another area of useful information on non-admitted insurance. So whether you purchase non-admitted insurance or admitted insurance, it must still be sold to you by a licensed person or agency. So simply because it's not admitted doesn't mean that the requirements. So we actually we actually reducing the bar, the quality in terms of expectations. So non-admitted insurance still is subject to certain laws. It is just not subject to filing rates or following specified forms. In the United States, for example, many non-admitted insurance carriers are licensed as admitted in one or more states, which allows them to carry on business in other states as non-admitted. For example, if you have a company that is licensed in New York and the insurance company wants to go to Nevada, they might be seen as non-admitted in Nevada, but they are admitted in other states, in one or more states. So many admitted insurance companies have non-admitted insurance providers within their family of companies. That's a smart strategy. So if you run into trouble and need help with a non-admitted insurance policy, you should always start by asking your insurance broker or agent to help first. Still, if that fails, you can always contact the state insurance commissioner's office for help too. Every state has a state insurance commissioner. So if they're not in the position to help you, they may refer you to the state surplus lines offices. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I hope you are doing fantastic. I'm doing marvelous if you're to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's keep rolling. Let me just wrap up today's show. I only have a short session to talk about it. I hope that you are enjoying your coffee or tea or vodka. Now, are the non-admitted insurers safe to use? Well, simply because an insurer is not admitted doesn't mean it is not stable. I've already talked about the financial stability of non-admitted insurers before. So a non-admitted insurer may be better equipped to handle large losses or have more experience in higher risk environments than standard insurance companies, and may even provide certain advantages to consumers. Let me give you an example of a non-admitted insurance instability. So one example of a non-admitted and well-respected insurance provider is Lloyd's of London. So unlike most of its competitors in the industry, it is not an insurance company. Rather, Lloyd's is a corporate body governed by the Lloyd's Act 1871 and subsequent acts of Parliament. So Lloyd's of London, generally known simply as Lloyd's, is an insurance and reimbursement market located in London, United Kingdom. Actually, this is a fascinating company, so fascinating that we are preparing right now an entire show. We are going to devote an entire show, 20 to 30 minutes, on this company. So Lloyd's is a non-admitted insurer in most of the United States. It is admitted only in a couple. So also, Lloyd's is not even an insurance company in terms of how a traditional insurance company works. It is rather a syndicate, or as I said before, an insurance market. However, they are one of the largest insurance providers in the world and have top ratings as being financially stable and consistently rank as the top surplus lines insurer in the world. So on the screen right now, you can see we took a screenshot of their homepage. The website is www.lloyds.com, LLOYDS.com, and they are doing great work. All right, let's quickly recap today's conversation, folks. Today, I was just talking to you about what is non-admitted insurance, where you find non-admitted insurance, the advantages of non-admitted insurance, the difference between admitted and non-admitted insurance. Are these insurers higher risk? How to check if a company is financially stable? Useful information on non-admitted insurance. And are the insurers safe to use? And I'll give you an example of a non-admitted insurance instability. I will talk to you another time. But until then, remember, stay marvelous.